Hello and welcome everyone to the week ahead commodity reports, where we of course will be reviewing the markets for the week ahead. Now historically, the final stretch of the calendar between Thanksgiving to the end of the year, this has always been considered as one of the biggest and most profitable periods for traders to capitalize, and this year once again is living up to expectations. The routine Black Friday sell-off the day after Thanksgiving, which has become known as a very predictable and lucrative trading event, that has played out like clockwork yet again. However, this year's Black Friday sell-off, it shattered all records as markets went parabolic on the news of a fresh COVID-19 variant. Nearly 2 years into the COVID-19 pandemic, the world raced on Friday to contain a new coronavirus called Omicron, which potentially could be more dangerous than the Delta variant. Traders dumped risky assets from equities to cryptocurrencies. They piled into safe havens like gold, which soared over 300 points before prices then pulled back as traders booked profits ahead of the weekend. Looking ahead, it's another busy week for the markets with a series of high impact events that traders will not want to miss out on, which includes Fed Chair Jerome Powell and Treasury Secretary Janet Yellen's testimony before the Senate, a critical OPEC meeting, and also the latest US employment figures. Now, in light of rapidly surging inflation, global supply chain issues, and now a new and potentially dangerous COVID variant, traders will be anxious to hear from both the Federal Reserve Chair Jerome Powell and Secretary Treasury Janet Yellen as they testify in Washington on Tuesday and Wednesday. Expectations are running high that the Federal Reserve could be forced to delay or even revise its tapering plans until they have a better idea of the risks to the economy from the new COVID variant. Elsewhere this week, all eyes will be on the OPEC meeting and its allies as they meet on the 2nd of December to decide whether or not to raise oil output. Over the last year, OPEC and its allies, they have firmly resisted pressures to increase output, which in turn has sent oil prices skyrocketing over 300% from the April 2020 lows. Now, the prospect of the new Omicron variant of COVID sent oil prices absolutely plunging on Friday, which traders view as resembling the identical trend seen last year just before oil prices exploded higher. Now, on Friday, a spokesman for the cartel said that OPEC was monitoring developments around the new COVID variant and will decide on their output policy in accordance with market requirements. Should OPEC once again resist pressures to increase output, then that could ultimately open the door for oil prices to rocket above $100 a barrel and even get as high as $150 a barrel into next year. Finally, another key macro event that traders will have on the radar will be the closely watched US jobs report due for release on Friday. Traders will be paying very close attention to Friday's data, especially as it always sets up for some big moves across the markets, presenting incredible opportunities to generate huge gains fast. Whatever long-term goal you're looking to achieve through your trading, whether that's to create a full-time income, a second or replacement income, or just to earn a better return on your savings, then now is the time to take action. Right now you have an opportunity to finish the year on a high note, but also set yourself up to hit the ground running in 2022, which based on our research we predict is going to be a record-setting year due to all the macroeconomic events that are currently unfolding in the markets. Extraordinary times, they do create extraordinary opportunities. Right now, we are living in one of the most exciting and rewarding periods ever in monetary history. So if you've been kicking yourself for missing out on some of the biggest trading opportunities so far this year, you still have time to make 2021 your best year yet. And of course, if you would like to join our community of successful traders, learn the research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to join our professional mentorship program. So with that, let's move over to the charts and we'll talk you through exactly what we're looking at here as we head into next week. So first of all, gold, silver, platinum, palladium breaking down the way they have in the last week has been exactly what we've been talking you through over the last couple of weeks to anticipate this into the middle of November as you move into Thanksgiving, then as you go into Black Friday, contract settlement, end of month profit taking. So you can see exactly that has played out. So silver price is now on Friday down just under 2%. For the week, down 6%. Everything that we talked you through on the previous reports. Again, feel free to go back, watch last week's report, the report the week before that, gold and silver asset of the day. We predicted all of these moves, so I do hope you've been able to capitalize massively off the back of this. Now with that, if we have a look at silver prices, as discussed, we have now seen a break all the way down from the $25.50 handle all the way down to essentially sub $23 there on Friday. Now, as we go into next week, we are going to be moving into the final couple of days of November over Monday and Tuesday, but then you move into a new month, right? From Wednesday, the 1st of December onwards, then we're also moving into non-farm payroll. The following week, we're then transitioning into the FOMC statement, then the European Central Bank announcement. There's going to be plenty of opportunities to trade this volatility as we transition into the month of December, and as often you get fresh capital coming into the market once everybody is back from the Thanksgiving public holidays in the USA as well. So then let me shift you over to gold here as well. So gold actually broke out to the upside on Friday, over a 300-point surge, as we saw many other markets selling off. You've got crude oil on Friday, dropped 12% to the downside. Palladium on Friday dropped 6.5%. Platinum prices on Friday, they dropped down 4%. Copper prices on Friday, they dropped down 3.6%. So we saw some massive moves there. Even the dollar index broke down almost 1% to the downside on Friday. Again, everything that we talked you through, expect exaggerated moves on Black Friday. It's happened time and time again. This year has been no different. So if you know this ahead of time, you can lock in lots of profits, as we did at the Gold and Silver Club. We made sure that we were locking in a lot of profits, over 3,000 points banked. So of course, for every one lot contract that you would be trading, that's over $30,000 of profit. For every 10 lot contract that you would be trading, that's over $300,000 of profit. And you can see exactly what we mean here by the massive exaggerated moves that we've seen on Friday with thinner liquidity in the market. Many traders off on their public holidays there. So with that, you tend to get big exaggerated moves, especially combined with a news item, as we have seen with a new variant, which caused just a huge sell-off to the downside that you can obviously capitalize on. And now you're in a fortunate position here where you can then reassess as we go into next week and look at the next big opportunities because of the news items that we do have coming up next week. So firstly, just going back to gold. So again, we've seen over 1,000-point breakdown in the last week and a half from the highs to the lows. Everything that we talked you through has played out. So we've now seen that correction. I mentioned it before. Do not FOMO in after the breakout. Many traders out there were getting ultra bullish on gold, suggesting that the lows were in and that we were going to get this slingshot move high, that we would just continue to surge from here. We warned you, this is very rare to see that happen as we go into Thanksgiving, Black Friday. We're expecting a sell-off and pressure to the downside. Obviously, that has all played out. Now, we got a break back above 1,800 there on Friday. So you can see here where we did get the safe haven bid. And what I would look out for into next week is whether this dollar index is now going to start breaking down. Obviously, if the dollar here starts to roll over and pull back, that will be supportive for metals. But normally, you'll start seeing this pressure come in for the dollar as we transition throughout the month of December, which can set up for some fantastic opportunities on commodities as well once the dust has settled. Palladium, another great example where it's dropped down 6.3%. It's taken out a liquidity zone here. As I mentioned before, we banked over 4,000 points there on Palladium. We also banked over 1,150 points there on Platinum before we had these big sell-offs to the downside. We were expecting all of this to occur. So now we're at very favorable levels. However, you still want to wait for the dust to settle as we go into next week. And then as we transition into a new month from Wednesday onwards, then you've got non-farm payroll and just some great cycles to capitalize on, not only with Palladium here, not only with gold and silver, also on platinum too, as you progress throughout the month of December. And of course, this is the same with crude oil, which is now broken down 12%. It's the biggest one-day move here for crude oil since March of 2020. Immense move, which took the price all the way from $78 a barrel down to $68 a barrel. A $10 move to the downside in one day. So you can imagine once the dust has settled on this market, especially with the OPEC meeting next week as well, you're going to just get some huge opportunities here as we transition throughout the month of December and into January. There are some very specific cycles here as well coming up with crude oil that you definitely want to capitalize on. It's the same with gold. At this time of year, there are some really big opportunities to capitalize on as we go throughout the month of December. But the key, of course, as always, is knowing the cycles and knowing when to really capitalize on the volatility and getting ready for the key events, which will be the catalyst for those massive moves. And some of these events will start happening as we go into next week, as we have Fed Chair Jerome Powell, Janet Yellen scheduled to speak. We also have start of a new month on Wednesday into the beginning of December. And of course, we've got Friday's non-farm payroll data as well. So there are just going to be back-to-back opportunities for you to capitalize on throughout the month of December. As you know, commodities, they don't just move up in a straight line, they will zigzag. So if you want to really maximize your money-making potential and thrive, not just survive in these fast-moving markets, you need to adapt your strategy to the current market conditions and, most importantly, utilize a professional research-driven approach. In these times of heightened volatility, rapidly surging inflation, the importance of having an essential income-generating skill like trading has become a must-have necessity. If the pandemic has taught us anything, it's that you should never rely on just one income stream. Building multiple streams of income, it's no longer an option, it's a priority to make sure that you're inflation proof and that you can thrive in this highly lucrative environment, not just survive. If you want to gain that ultimate edge to really supercharge your wealth in these fast moving and highly profitable markets, then you need to trade like the hedge funds, the money managers, institutions, utilizing a professional research driven approach. Having access to the right data at the right time, it's the single greatest difference between ordinary and extraordinary results. The greater your data and intelligence, the greater your edge in navigating these fast-moving markets with that precision, accuracy, and high levels of profitability. Trading like every other misguided retail trader using outdated technical analysis and gimmicky technical indicators will not work. You are guaranteed to get crushed and chopped up in these markets. So with that, this is of course where you want to be applying a research-driven approach utilizing data, statistics, market intelligence, alongside that learning and understanding the daily, the weekly, the monthly, the quarterly cycles for each commodity, the capital flows in the market, extremely important. So alongside that, you also want to learn the macroeconomics, the key news items which will have a big impact in the market, creating those impulse moves where you can very quickly capitalize and get fast gains. Alongside that, of course, you want to learn the intermarket correlations, the ratios in the market, the fundamentals, sentiment, and of course understand how the hedge funds, money managers, banks and institutions are positioned in the market. That will help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. As a member, you get access to our exclusive live trading room webinars. You get access to real-time trade ideas, access to institutional research and market intelligence, access to our private Members Academy website, and also support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below this report in the description, so just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.